We are back, and all eyes are on Jerome Powell and Jackson Hole. That's a place, not a thing. We'll be discussing the latest in the markets, the volatility we've seen in crypto, and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing Kevin or I say is financial advice, so please do your own research. Kev, happy Monday. Good to see you. We have what looks to be a slow week ahead of us in the markets, which is a lot of the time when shit can get really weird really quick because there is no one's expecting anything, and then boom, something big could happen. We had we're still waiting on the fallout from the Trump and Putin meeting in Alaska and how that's going to impact the markets. We have Jerome Powell on Friday from Jackson Hole giving comments. Is he going to signal that we're heading toward a rate cut? I don't necessarily think so, but I know the markets are very interested. This is when, last year that he made it clear that a rate cut was coming. A lot of people are hoping he does the same again. How are you feeling going into a tame-ish week in the markets?
Yeah, we had OpEx on Friday. We didn't do a show Friday, but that's an important thing that happens because now we're heading into a quarterly OpEx, and those are big events in the market when it comes to flows and seeing how volatility will react. So this week should be really interesting. I don't necessarily would say it's telling because we still have the volatility expiration Wednesday. We're not going to hear from whatever Trump says about what happened in Russia and Ukraine until after the markets close today, most likely. And then we have Jerome Powell on Friday. So you have a few events this week, could move the market on the front end of the week. And then on the back end of the week, you might see sideways or maybe a bit of a tail off. Depends on kind of how people react to these things. But we're in a really interesting point in the market. I think we're, the title of the show today is a big market pullback, a certainty. We can talk about that in a little bit, but there's definitely some room for volatility coming in, I think, on the later half of this week and on. So I think we're going to see a lot of fun moves both back and forth and probably on low volume. But, this is kind of what we wanted. This is the summer months are over pretty much.
Yeah, things are about to get very interesting. We had, we didn't do a show on Friday. I had some stuff come up. There was that PPI data Thursday that really shook the markets. That number came in significantly higher than what was expected. And that got a lot of people worried. We went from a certainty that the Fed was cutting all of a sudden to only like 80% that they're going to cut, which is a big move.
Yeah.
So the markets did not like that. And that is where, Jerome Powell on Friday becomes such a big sticking point, is like, will he or won't he? And in my opinion, from listening to a lot of Powell talk over the years, I think that if you're expecting him to signal that a cut is coming, you're going to be very disappointed, because I think it's going to be one of those things where, if inflation had come in line on Thursday after that terrible jobs report, it would be one thing. But I think he's going to give his line of, we're going to be the move we make is going to be data dependent, blah, blah, blah. And if I think the markets are kind of preparing for that with some of the selling we've seen, especially in crypto. But if the markets aren't expecting that, or if he even comes out like a little bit hawkish, I think we could see a major pullback there. Now, maybe we see a few other data points this week. We have PMI on Thursday. The Fed minutes on Wednesday come out. That should be kind of interesting. But it does seem like there's more risk of Powell being hawkish or non-committal than there is of him like signaling that, hey, we're definitely getting 25 in September.
Yeah, and there's a lot of things too that, again, the Fed isn't necessarily showing that we should take into account, but like reverse repo versus the M2 money supply telling us very different things, right? We're also seeing the bond market erosion a little bit here. And Powell does have to take all this stuff into account because guess what? It's probably going to impact whether they hold rates as is. maybe, I mean, worst case scenario, another hike, right? The market would just fucking kill itself. Um, maybe that's what it needs. Or, everyone's really excited and they kind of front run the actual cut. But then when the cut gets here, it's like, oh shit. Well, we already kind of front run it. So again, markets are forward thinking. They're going to be pretty much just pinned at whatever every single word that Powell says. Doesn't mean that they can't still be irrational, right? If the volume comes in, that's when I think we're going to see some true moves in this market, though.
Yeah, it does feel like the market's kind of, things are kind of like stalling at the moment, and
VixEx.
losing that momentum, it can be tough to get it back. It's
Mhm.
going to need a push. We'll see if we can get it from what Trump has to say today about Russia and Ukraine, or if we can get some better data next week, because next week we have PCE last Friday of the month, so that should be a big one
I wouldn't be
right there.
surprised
Yeah.
if Trump says something like somewhat bullish for the markets and it goes into Wednesday. And then, I don't know, Wednesday after market close, after VixEx, they're like, nah, that was a bad deal. We don't want part of it. And again, it's been this give and take with the Trump administration and the truth, back and forth. Like, remember all these deals Bessent said they were coming? It's been like 28 days since they have announced that tweet. Nothing's come in the way.
Well, and like
So,
their talks with India have kind of fallen off a
yeah,
cliff.
yeah.
That's not ideal for someone who manufactures a lot of stuff, and who we definitely want to be on good terms with from a trade standpoint. So not ideal there. We're past earnings season right now. It's kind of I think this is like a good week to kind of feel out where you want to be in the final quarter, 4 months of this year, because I think there's a lot of important decisions to be made there. What do you kind of feel on the overall state of things, and how like, because are we topping in, is there still some momentum and we top in November or some point in Q4 of this year? It's a good time to kind of think that stuff through.
Absolutely. Actually really glad you brought that up because we have two scenarios, right? There's two scenarios I see, and looking at how volatility plays out this time of the year, some of the issues we're seeing with the reverse repo. Obviously, there's a lot of things happening in the bond market that are concerning. You have the one and two scenarios is that there is some type of QE that kind of pushes the markets up post September OpEx, and that can kind of lead us into the end of the year rally because then again, very much like summer, winter does get that low volume around the holiday season. I mean, half of December is pretty much dead volume. You don't get too much of a move. If we think about what happened last year when Trump rang the bell, we had that really big volatility spike, but that was in the first half of December. Right after that, though, kind of sideways. Didn't really move until the beginning of the year. Then we started seeing some of the pain with liberation talks going into a quarterly OPEX. So we could see that kind of happen if the market stays afloat going into September OPEX. Now, if something drastic happens and it starts to move and it just ends up rolling nonstop, we might be over. We might have topped. So those it's obviously it sucks to say like it's one or the other, but it's good to know like if the volatility does come in and it starts pushing up higher and higher, and there is hints that we are going to probably see that in September, probably after September 5th. We'll show the chart in a second, but you might have the opportunity to see it be more than just seasonal flows and seasonality and volatility, and it actually might be a greater market move. So those are the two plays. You either have this crash going into September OPEX that's greater than we anticipate, and that pulls the market down, and we don't get an end of year rally, or you have this somewhat seasonal volatility. Volatility remains compressed, and then once you get into like September 22nd or so onwards, you might start seeing this this push to the upside into the end of the year. So looking at that, you can kind of play volatility one way or the other. You could also go long with having trailing stops. I don't think that's a bad idea either, right? Because if it does pull back, at least you got your gains. It's going to be really interesting. But again, I'm looking more on the liquidity side. That's how I'm positioning myself. So things that are going to be problematic within low liquidity environments, that's what I'm bullish on.
I've started earlier this month DCAing out a little bit from my Bitcoin position. Nothing major, like enough that I'll still feel very good if it goes higher.
Sure.
But I didn't have as much liquidity on hand to buy any major pullbacks as I would have liked. And so I figured, if this is I've had some good gains on this. Some of this is Bitcoin I bought back in near the lows in 2022. So like I'm very happy with the profit I've made, and I'm trying to I don't trade. We've talked about it. I don't trade with leverage. I don't look to get liquidated, and I'm okay holding spot. And I want to put myself in as many win-win situations as possible. And it felt like getting some cash on hand heading into the back part of this year and heading into, when I think a potential cycle top could be in November was the right thing to do.
Yeah, honestly. And again, I have so many theories. And again, that's just kind of what the market is when you don't necessarily
we know, Charlie, you have a lot of theories that are rattling around in your head.
But the Bitcoin one is one that, again, I have no position in Bitcoin. I honestly think that Bitcoin is going to be problematic in a low liquidity environment because of how much supply that Michael Saylor has amassed, and the convertible bond issuance, which is problematic because they have no actual gains or returns, or they're not a profitable company outside of the unrealized gains through Bitcoin. Yes, I understand they have a ton of unrealized gains, but the problem is you don't have cash on hand. That's why you keep issuing convertible bond notes so you can get cash. But when you do get it, you buy more fucking Bitcoin. And now your price is so high, like it's north of 70K. You have a liquidation event, say a fire sale, something happens in Japan, you're kind of screwed, guys. Like he's going to have to sell off some of his to realize some of those gains. Otherwise, someone's going to sell it for him and he's going to be below his DCA average in at some point. It's complicated.
I saw that they bought more today and they're only like $50 million worth. I was like, that's not bad. Their buys are a lot smaller.
Exactly.
This is going to be a problem.
Right? Because how much was it before? It was billions, right? It was an insane amount. And the fact that we're seeing that now, it shows you that, maybe cash is starting to dwindle down. Volume is dropping a little bit. And again, I still think that we have a little bit more time. Again, financial instruments and predictions and price estimates, you could throw those out the window. We are living in a very fraudulent system. That Tether's still out there. Justin Sun is trying to sue Bloomberg now. Like there's so much shit going on, and it's just like, okay, this is the height of euphoria, of mania, of fraudulent euphoria too. So we're gonna see stuff like this happen out there, but I don't think that's necessarily a bad idea. I want to actually show something that's going on in Asia real quick.
Go for it.
But this is something that's really bothering me, and it's been bothering me for a few days since it broke out, but that is the Japanese 30-year. So it's been in this triangle pattern, right? It actually did a double top at the 2000, I think the highest level since 2008. It did that in May of this year as well, and it also did it in July. And then it started trading within this triangle pattern, right? The highest it's ever been is like 3.2. Previous to that was, I think, 2008. Yeah, fun year. But what we're looking at here is it broke out. It tested support on it, and it started pushing up again. And in the U.S. market hours, you're seeing obviously it's kind of pulling back a little bit when as high as 313 today, which is not great. The higher that this yield goes, the more unrealized losses that banks like SoftBank, Nordschuken, UBS definitely inquire. So that's problematic for a bank where you're starting to see, sure, the equity market's going up, but their unrealized losses on some of these bonds that they bought at extremely low yields is running amok. So looking at this here, could it go up higher? I think it can, guys. I'm looking at the MACD volume. It looks like it's about to go positive again, which means the yields probably will go higher. Now on the stochastic RSI, it's pretty overbought, but that doesn't mean that we can't have a major spike in the yield in Japan. Japan also last night, it was its 28th BOJ intervention into Forex. And that's since the beginning of August. One night they did 3. You can't not acknowledge the fact that that's problematic. And now considering that the yen is the second greatest currency when it comes to trading pairs in global markets, kind of spooky. Could this thing get stronger? Very possible. Could the dollar pull back just a little bit and allow this thing to also pull back and get stronger? Yeah, it absolutely can. It's
kind of spooky.
It's very spooky. But looking at
spooky season out here in the markets.
Oh, that's coming. October is going to be a bitch, I bet. I have no idea if it will, but honestly, if it does, I'm not upset about that. We are so high above some of these EMAs, like how high you are above the 50 and the 200 in the Nikkei, right? This is you're 8.5% higher there, and in the 200 in the Nikkei, you are 13.5%. But you keep hitting your head on resistance. Where it opens tonight, who knows? it could, try and just hug this line as long as it can. But you can see things are about to roll over on the daily stochastic RSI. And if we look at the volumes on this, overstretched, and the green volumes, sure, looks like they're about halfway through. So you might start to see it tail off. I wouldn't be surprised as the true volume of summer volatility kind of kicks in, in the second half of August, going into the beginning of September. You start seeing volume like we're seeing here in April on the Nikkei. If it loses this blue line of support, you're absolutely screwed. This thing is going deep, 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 probably down to this red line. So from where we are to where that red line is for the Japan, it's about a 27% drop. Problematic. And again, when you see something like that, it only exacerbates the problems globally for not just the United States, but for Germany, for Europe entirely. I say Germany just because a lot of derivatives are with Deutsche Bank and also UBS in Japan. A lot of yen carry trades that are complicated if Japan starts to eat shit. The other one is obviously the Bank of England. Problematic. But I want to pull up the yields on the 30-year US. This is insane too. I just saw this today. We're at 4.93. We're actually going up again, guys. And you can see the yields on the side here. Everything is pretty positive, meaning that they're going higher. The 10 years at 4.339. So it's trading within this range right here. This thing ends in November, going into December. So we could say maybe that's our argument for, the end of the year rally. It could also be hinting that, this might be breaking out higher sooner than we thought. I could even adjust this line. We could say it's something like that, right? And it breaks out in September. I don't necessarily like that. I'm just going to keep it like this. But the yields are going higher. Equities are going higher. That's not a good thing. We need that debt to be bought by someone. No one's buying it.
All right. What else? I mean, we can talk about crypto for a little bit. We don't need to spend too much more time today.
Yeah.
Let's go look at Bitcoin, maybe ETH, maybe Sol, and then we can wrap it up.
For sure. Let's pull up the screen. Bitcoin is down here. I got to get a better Bitcoin chart, man. This shit's crazy. Even me saying this shit's crazy. Let's get rid of... It's fine, guys. It's fine. But looking here, I don't know why. Why is my trading view acting stupid? Hold on. There we go. Okay. Nah, it's still acting stupid. But Bitcoin, you see it bounced off the 50 moving average on the daily. A little bit of weakness, right? You want to kind of see it trade back in here if you wanted to kind of keep the trade going. But if you start losing this support line, which it kind of did momentarily today, you're going down. You're going to probably test the 200 moving average, which is considerably lower, right? It's at 103. But just give me the arrow. There we go. And then if that's the case, then you're probably going to see dominance drop as well. I think dominance is probably going to continue to drop. I said 57.12 is the level we want to kind of see it hit. And if that's the case, probably ETH is going to run a little bit more. Now, I do think that there is some complications when we look at ETH in relation to Bitcoin, because this to me looks like it wants to test the 4,075 level where it kind of broke out of, right? Where it's been a level of massive resistance. Now it's maybe looking to find support there. You can see that the stochastic RSI has some room to the downside still. And we also see that the MACD on ETH is rolling over. It should be negative for maybe a couple of days here. The problem is you kind of need ETH to hit all-time highs if you want an alt season. That's the bad thing about it, right? Because you're going to see ETH rise, you're going to see Bitcoin dominance pull back, and then you're going to see some of these things open up for alts. And alt season, if there is one, it's probably going to be short-lived. In my opinion, until something catastrophically either injects tons of liquidity into crypto, or we just get like the best news possible and people continue to just gamble away and hopefully see what's the next coin that we could throw our liquidity into. It's really complicated here. So do I think that we might test 4,000 over the next few days? I think it's possible we could have a little bit more of a drop. You're probably going to see alts drop with it if that's the case. Not ideal. You can see Solana right now is pulling back a little bit. I would like to think that we are towards the end of something. So when I look at Solana's move here, and we're looking at something in ABC fashion, I would say that this is 5 waves up here, 3 waves. So I think that this corrective pattern could be done fairly soon. Maybe we find some support on the 50 moving average. And from there, we could put in one last 5-wave move to the upside, which allows, alts on anything that's on Solana and also some of these other ones like XRP, Cardano, AVAX, Link, all those to kind of get a bit of a bid. But that's the only thing that you kind of need to see, though. You kind of need to see ETH pull back and then push up, or you just need to see ETH just push up from here to all-time highs. Once you get ETH to all-time highs, your window for alt season really opens up. That being said, we got to talk about our boy Fartcoin, right? I don't know who's more upset about this, you or me. I'm going to say you because I think you have a bigger position than I do. But this thing is one of the most frustrating buys that I've made
what
this
a
entire
fucking
year.
disappointment this goddamn coin is.
Here's the thing. It's the best chart with the worst price action. And I just want to like punch my screen every time I look at it because I'm like, the second I sell, this thing's just going to fucking take off. I know it. And that's my luck. It is. But if I could look back at what I've invested this year, I would not have invested in this, or I would have taken profit at that 160 something level. But again, this chart is one of the best charts I've seen. It's a cup. There's the fucking handle. It just needs to go up. This is a long ass handle now. It looks like I don't know what this looks like. It looks like shit to me now, but it's still a good chart technically. But the thing that I really wanted to point out about this is that you see that the volume is negative. It's getting a little bit smaller here. So I think you are anticipating some sideways volume. The thing that's really interesting though is the Bollinger Bands. So when the Bollinger Bands get tight, you get an explosive move. It could be in either direction. It really can. I'm not sold on what's going on here. I had some yellow lines on there earlier. It looked like a diamond pattern. It might be. Maybe we invalidated that today by going down to like 90 cents or something like that. Or how low did it go today? 89 cents. But as long as it kind of holds above this blue line of support and maybe it kind of coils up into like some type of triangle pattern on this side, we got the Bollinger Bands kind of tightening. We might be getting a hint that maybe ETH takes a run, Solana takes a run, and you have a pretty good move to the upside for Fartcoin. I think it's probably going to be explosive. And again, we've been trading in this range for the entire summer, pretty much, even as, House pointed out, even as early as April. And it's like, it's going to probably break out if this pattern holds and this is a true cup and handle. We just got to break that 161 level. And when you do, it's probably going to be very, very quick, very fast to the upside, very similar to how we saw it back here in January of 2025 when it just, shot all the way up to 272. So I'm continuing to believe in it. There are really good signs out there in the market for it, but this one really will pull the fucking hair off your chest, pulling out your hair, your balls, your asshole, anywhere you have hair. This is just drive you insane with this terrible, shitty price action. It's literally cucking to Bitcoin and Ethereum. Like it's become submissive to those things. So that's my take on Fartcoin. I still believe in it, but damn, this sucked. I haven't sold.
Yeah. I'm sitting here. Because I feel like moderately like capitulating, I know that I shouldn't do it.
Yeah, that's how it is, right?
There's still time for this to go back up. It's still funny. It still has the mind share. So I'm going to stand with it. I'm going to stay. I'm going to continue to hold. I think that there is still a good opportunity for a bounce back in the next few months. So as much as I do want to be done with this, I'm not doing it yet. You will not shake me out of my Fartcoin position yet.
I will say this, though, considering, because again, the thumbnail of the show today does talk about, options and volatility opening up because now we have a window. Flows after OpEx depend on, everything changes. So if you start getting negative flows, the price in the market usually comes down. And then some of those instruments that are used to compress volatility could unhinge volatility. I've talked about this in the past too, looking at these charts. Usually go into these triangle patterns that are just kind of breaking down. The VIX volatility keeps getting compressed until at some point it can't any longer. You see this in February 2025 leading into the March OpEx. You got this also in March to April right after that. So you had a double one there. And then we've been in this one since, April, Liberation Day, the fallout of that. we got one ending. It's September 5th. And that's problematic, right? That means that we could see some breakout in volatility. That can be markets pull back. That's why the Bollinger Bands on Fartcoin are really interesting, because that could either hint at a major crypto meltdown, or it means that we're probably going to get this alt season that lasts, I don't know, 2.5 weeks or something like that into September. And then it's just, all bets are off if it's a liquidity issue. If it is a liquidity issue, then everything kind of eats shit. If it's one of those trade war things, you saw that Bitcoin kind of survived during that period of time. I'm more on the side that it's liquidity. The yields are telling me that. The volatility is hinting at that. And, there's a lot of plays that could be made. But I don't know. Timing, they say you can't time the markets. You kind of need to time the markets on this one. You just need to know, like, okay, well, if it's getting close to this date and shit looks kind of bad, maybe I should do something about these positions before I'm forced to do something about these positions.
Yep. We're going to wrap it up there. That's the question. That's what we're trying to answer. But we'll be back later this week. Appreciate those of you who joined us. If you've not, I spilled water on myself. Look at this. I'm so tired. I'm a mess right now. All right, that's going to do it. Hit like, subscribe to the channel, drop a comment. We'll be out later this week, talk more through what's going on in the markets. Until then, stay safe out there. Appreciate you for watching, and we'll see you next time.
Take care, everyone.